In this video, we're going to take a quick tour of the Bethesda Imaging Workbook, and this contains many of the features of a pro forma that you'll want to use in a typical business plan or even in just a summary, executive summary. It suffices for that. It contains all the necessary elements you'll need, and there's minimal input required to produce a reasonable set of pro forma. We open the workbook with a summary. In this summary, we of course have some of the normal identifiers for the company, and there's some other things that we can talk about at some other time, like the difference between authorized and issued shares and post-money valuation. But the important thing to pay attention to here is this summary right here. The advantage of this is that you can cut and paste this from the workbook into a Microsoft Word document or any other kind of integrated into LaTeX, whatever, and it provides the essential 6 lines that are necessary in summarizing the outcome of the pro forma. And outcome of the pro forma is sort of the operative word. This is intended to facilitate decision making. We also, of course, have a list of the table of contents. We have the 4 key financial statements, the 4th being the owner's as equity balanced within or integrated within the balance sheet. And so this workbook contains just about everything you'll need to get going. It's a quick way. It's a 5-year pro forma. That's typically what people do when they, that's the scope when they first do a pro forma is about 5 years. Some people do 7, some people do 3, but that's what it is. Moving on to the balance sheet, we see this is a conventional setup where we have assets plus liabilities and owner's equity are all featured here. Of course, we would expect the total assets to equal the total liabilities and owner's equity. It's surprising a number of times where people will present a balance sheet in which assets do not equal liabilities and owner equity, and this would suggest something fundamentally wrong. You'll notice in this sheet the absence of blue cells, and in this particular workbook, wherever we have a blue cell, this represents data that we enter. So even with our summary, this is a derivative. That is to say, these are derived quantities from other portions of the workbook. So there's not much to enter here except maybe the date and some other things. But going back to the balance sheet, here we see there's really nothing to enter at all. Again, these are all derived quantities based on the other financial statements. Next would come the income statement. Look, once again, except for returns, allowances, and sales discounts and your starting inventory, there's really not much to enter here in order to create a pro forma. Where the real work comes into play is in the cash flow and also in sales. So it's your cash flow, your sales, and actually your personnel where most of the work is centered. Even on the cash flow, the top line that we're always concerned about is basically the cash from product sales, your investments, and your total cash receipts. What we can see is that our sales are what used to drive the cash flow, and so a lot of time is being spent on the sales summary. Of course, our previous video went into entering data into the sales summary to some extent, but again, we have the sales, cash flow, and the income statement that really represent the center of our attention when we create a pro forma. On the income, what we hope to look for is basically in the out years, net income after taxes to be positive, hopefully in the last 3 years or even in the last 2. So net income, important point here is the net income can be negative. However, cash flow for every year must be positive. So again, a negative cash flow would simply, a negative income statement would simply mean that you did not have your revenue did not exceed expenses, but what you had done was you had secured investment dollars in anticipation of that difference. So if we look at year 2 in Bethesda Imaging, we understood that in order to keep cash flow positive, we had to have $1 million investment because our expenses of our expenses of $1.4 million were not enough to overcome the revenue in that period of 964. So we wanted to keep a positive cash flow. So that's a net cash flow balance, and we can see that our ending cash flow was cash balance was positive. So one more time, let's kind of go through this really quickly. Summary is basically derived quantities from the other 4 financial statements. Balance sheet tends to be derived quantities too. Same with the income statement. Most of the information here is presented and derived from other quantities. We want to focus on cash flow, sales, and personnel. Again, cash flow, there's a few decisions to make. Services, equipment rental, things like that. And you might be wondering, why does insurance and utilities and telephone, why don't you have to enter those? Well, for the purposes of this particular pro forma workbook, what we've done is we've said that there's actually a series of standardized comparative values. And what we're doing is we're taking all of those values and putting them in an assumption spreadsheet. And you can modify those values from here. So for instance, you're going to assume estimated salary growth is roughly 5%. Marketing as a percentage of cash receipts would be 1.5% with a $5,000 lower limit and a $20,000 upper limit on your marketing expenses. Same with royalties. The convenience of putting these parameters in the assumptions is it reduces the number of traditional decisions that need to be made so that when you think of the cash flow or the sales, you can actually focus more on growth in unit price, growth in sales, and not worry so much about things like sales taxes and services and the website and leases and things like that. These are things that are fairly standard. Okay, so again, our assumption spreadsheet, which is the very, very end, is extraordinarily convenient for burying a lot of information that is somewhat standard. Like many of the other worksheets, there's not too much to enter into the shareholders and the projected equity ownership because there's a few things to enter like shares authorized, initial stock price. These are all fairly standard. What's more of interest is to look at what your executives will receive as their initial equity stake in the company and how that equity stake is diluted upon round 1 and round 2 investments, and that's just a matter of entering those values here. This allows for a very convenient what-if explanation. Another feature of this workbook is a series of derived quantities in which we can estimate the valuation of the company, and we do that 3 ways. We take the classic HBR discounted cash flow method, and we make estimates over a 5-year and a 7-year period with some assumption of growth. Okay, so we take the lower bound and the upper bound and average it. So for Bethesda Imaging, it's got a $4 million post-IP valuation based on discounted cash flow. If we were to look at the multiplier as a sunk cost method to pre-production, then at an IP multiplier of 2.5, the valuation would be 6.9 million. And of course, retail market penetration. This is just sort of a test of a valuation, and this says it's a very, very low market value. So basically, we end up with average of the methods of $3.8 million. And so basically, what you're saying in the valuation is not so much the significant digits, but basically we have a $4 million company. Some facility parameters that are often useful to explore. This is if you're going to be renting or leasing, or if you're going to be building out. And there's a few questions here to ask yourself concerning leasing and leasing expenses. Ratios are pretty straightforward. We have roughly 9 that I like to look at, and this is the relationship between the 9. So, and again, our assumption spreadsheets here. But in terms of these ratios, these are good to look at from a comparative basis. So in summary, what we have is we have our workbook. We have about half a dozen spreadsheets that are useful to use as a starting point for your pro forma. It can help with decision making because many of the trivial decisions are buried in assumptions, but you can change those assumptions as we've spoken of. So my recommendation is download the spreadsheet, start thinking about what your sales figures would look like, and then start exploring the spreadsheet and doing some parametrics. I think you'll find out some interesting aspects of your business that will help you in the development of a summary business plan. Thank you.